In this video, I'm gonna be taking it from this to this. In just a few matter of seconds, you will be able to take high probability trades and be able to catch trades that are easy and simple. Through this one video, you will be gaining everything you need to know about Fibonacci trading and how to identify high probability trades through this simple and easy method that catch me results and take profits just like this. And you will be able to take profits every time, making trading seem like an easy catch. So stay tuned in this video while I explain everything to you. Now what's up guys? So you have been hearing all along this entire trading season that trading is simple and easy. But many people don't really get what simplicity is, which I will be explaining clearly to you in this video. As you can see here, we are on a 4-hour gold chart, which I have been trading for like a few months by now, but I have the exact experience that you need and everything that you will be looking for is in this video. So stay tuned as I explain everything to you on how to mark up your trades on gold and how to clearly analyze gold for you to be a profitable trader. So starting on the 4-hour chart, here we are on the 4-hour chart, and the first thing you want to do is to be able to mark up your key levels on gold. This is my first level that I will be looking at. First of all, you should underline or mark up your highs and lows. So this is our previous high and this is our current low on gold, the lower low, right? And as you can see, gold has been having some choppy conditions or arranging conditions. As you can see, we have been going up for some time and then we still get down to this level but not being able to break it, and then bouncing off from this level again and being able to continue up to the upside. But then at the moment that I was trading gold, I was clearly seeing that we are in a short time downtrend. As you can see, we had a low high here, it came down, retraced a bit, came down, retraced a bit, went down again, and then we had some shift of structure here, retracing a bit and then going up. After this we had some same shift of structure and then we went up again. And as you can see, this sequence has been happening for some time. If you are asking what the shift of structure was, here was my shift of structure, which showed me that we are changing from bullish to bearish. And here is where I got in, trying to identify what to do next on gold. So I marked up more levels here on gold. As you can see, we have this level which has been respected, having many touches here, here, here. One more touch here, these two touches down here which make up a double bottom, and then this touch here, this touch and this touch, which makes this a very highly respected zone. Moving down, we have this low here which is like a support which has been tested on and on again, and which we are currently here, and I expect that price could like come back to this level or here to make a retracement before it goes down deeper again. But going further, here is the trade that I took, and this is what I was looking for in the time that I took this gold trade. So I could clearly see that we were in a downtrend, so I marked up my trend lines here to be able to know or to add more confirmation to my downward movement that I was tracking by the moment. I doubled the trend line, cloned it to be able to see it clearly. And then after I did this, I went down to the 1-hour time frame to be able to see what market structure do we have, or how the structure of the market was changing, and all the things that I needed to know in order to take my trade and be accurate on this type of trade. Let me adjust this a little. Okay, perfect. This is what I was seeing by the moment. Let me zoom a little. As you can see, here on gold we have this 1-hour top here and this 1-hour top again, giving us a confirmation of a double top, which the lower high was lower than the previous one, making this a bearish confirmation after this shift of structure, as I had said before. Now this is how I am able to determine what the market structure is. So I saw this shift on structure and then a lower high, which showed me clearly that we were in a bearish condition, and this could be persistent if we have this retracement back up again, and then we break this key resistance here, making it this support, making it a resistance, and then retracing to it again, and then looking for confirmations to be bearish and to go short on the market. So as you know, on gold, it's better to trade on the 15 minutes time frame. I mean executing trades on the 15 minutes time frame, looking for confirmations, right? As you can see, the first confirmation we got it from the high time frames. We had this shift of structure, the double top, and the retracement back to this level. So as you can see, on the 15 minutes time frame, we had some bit of a downtrend. We had a bit of a downtrend, then hit this key level here, as you can see. After hitting this key level, price went up again, as you can see. So we dipped down to this level and then we went up. Going up means that we broke this high right here, making it a shift of structure, which was a shift of structure but on a lower time frame, which was not meaning that we were going to be bullish for a longer period of time, but this was the lower time frame, which is not the key factor to show us the market structure has changed, right? As you can see, we broke this high, making a shift of structure. We were bullish for some time, and as I had waited, I waited for this move. After hitting this key level right here, let me highlight it for you. This key level here, which had been tested multiple times. As you can see, we hit it here 2 times, here 1 more time, and then price came back to this level 1 more time to break this structure. As you can see, we had some bit of a shift of structure again, which I was looking forward to go bearish, to go short. I mean, as you can see, we have this low here on gold. Gold broke this low, meaning that we have a shift of structure to the downside, which was the bearish condition in the market. Then this is what I was looking for. Let me just replay this a little bit for you to see this. And as you can see, so after getting this bit of a downtrend here, I had this shift of structure, and then to add more confirmation to my market right now, I also added this trend line, this short time trend line on gold, to be able to know what I was looking for. And now this is what I was seeing in real time. I also marked up some more key levels on the lower time frame, 15-minute time frame. You can see this level here. Let me just change the color for you so that you can see it better. Alright, you can see this level here that I highlighted in a red color. So we also had some more confirmations on the lower time frame, which was the 15 minutes time frame. We had this top here, shifted structure, retraced to this level here, and we got this double top again, which clearly showed us that we were in this current downtrend again, and we were to look for bearish positions. Now you don't just jump into the market after seeing this, you need to look for some more confirmation. So to get more confirmations, I needed a break of structure. What is a break of structure, you can ask. Now a break of structure happens while a previous high or previous low is broken to continue the normal market trend. Now as you can see, we have been short time bearish after this shift of structure. To make me more confident that my trade would work out, I needed to see one more shift break of structure here. So I needed to see this low being broken. After it was broken, I would look for a retracement and underline it and mark it up with some Fibonacci to be able to know precisely where to enter. So you can also learn this. It is simple. As you can see, we kind of broke this trend line and went up, so I had to adjust this to be able to know that this touch was perfect, making my trend line also perfect. So before you get 2 touches, don't be sure of that trend line. That's why I waited for more confirmations. So a trend line has to have at least 3 touches, right? And as you can see here, I had this 1 touch and we have this second touch, which led to an even deeper market condition, right? So this was perfect. This is what I was waiting for. And as you can see on the bigger image of the chart, we could have been somehow in a bullish momentum from here. So we also had a trend line break, right? This trend line here is going to be a little bit messy, but I'm going to try to explain everything so that you can be more precise, that I can be more precise on what I'm talking about. So we had this short time trend line here, which was broken under, and then we had a little bit of consolidation here, but it was broken. So this is what I was waiting for. I waited for a break of structure to be able to know that my conditions were perfect for a bearish trade or a short trade. Now, this is what I was talking about. We had this break of structure here, which marked up that we were continuously bearish. Now this is what I was looking for. And then we also had our retracement. So to be able to know what our clear retracement means, we are going to be utilizing some Fibonacci levels to be able to mark up what we need to look at, or how to identify clear and precise levels for our retracement to last. So using Fibonacci, you need to look at these key levels. This orange level, which is the 0.382 or 38.2%, and the 50% or 0.5, and the 61.8% or 0.618. These are the key levels that you should be looking for retracements in. I highlighted them with this box so that you could be able to see what I was clearly meaning. Maybe make it more opaque for you to be able to see it. Now this level here in the red zone is the levels that I was looking for. So if we had a retracement to these levels, which also go well with this level, this red level that I had underlined, we could have had more confirmation that this trade could work out. So after retracement, we needed to find a confirmation, a bearish confirmation for us to go bearish. Now as you can see, price had some bit of a push to the downside, but rejected by this level here. As you can see, we had a level of support down here, which was respected. This level of support, it was respected. Price kept pushing up for some time and get straight into our key level here. This is the level that we were looking for after the retracement. So you don't just enter after this retracement, you need a confirmation to show you that price is clearly still in the downtrend. So we need some sort of a bearish engulfing, or a morning star. So I waited for some confirmations. As you can see, it was not clearly bearish engulfing candle, but we also had two confirmations here showing us that the momentum of traders or sellers was still in the market. So let me reduce the opacity here that you can clearly see how these candles form. So as you can see, price pulled back into this key level of resistance, which was support before but then broken under to become resistance. Then I looked for, after these two candles, I also knew that we were on the same pace to be on a bearish condition. So let me just get rid of this Fibonacci. We had used this before and this highlighting of it. So after pulling into our zone of the 0.38.2%, 50% and the 61.8% levels, I clearly saw that we were on a verge to a downtrend. So I opened my position here at the close of this candle. After confirming bearish momentum, I placed my stop loss right above this at the break of this candle, clearly inclining with this short time level. Let me underline it for you, on this short time level here. So this is where I placed my stop loss. And then for my take profit, I always aim for, when it's on gold, I always aim for a 3 or 3.5%. But on this trade, I went out to see the bigger picture on this gold chart, and then I saw that we have some sort of a zone here. It was here. Yes, we had some sort of a consolidation here, which was clearly consolidating this zone, as you can see here. So this was a short time resistance zone in here, where price could reject and go down again, but then we broke up. So I saw this as a key level where I can position my profit target. So I position my profit target here, marking up 3 risk to reward ratio. As you can see, I also place my stop loss here. So I always aim for a 3 risk to reward ratio all the time. So I adjusted my position to fit my risk to reward ratio for me to be able to profit and get enough profits from this. So this was my first take profit, right? I always aim for my first take profit, and always I take my profits on 1.2 risk to reward ratio. So my first take profit was here, and 2, marking up this level here. Let me just highlight all my take profits that you can clearly see what I was looking for. We had some level here which was being respected here. As you can see, price came up here and kind of retraced to this level again, and then went down, and then after breaking it had a retracement, deeper retracement to it, and went up again. So this level was my 2 risk to reward ratio. This was my first take profit. My second take profit was at a 1 to 3 risk to reward, and then after I suggested that because of this momentum that we have been seeing on the 4-hour chart, as I showed you before, we had some bit of a double top, which I knew that we could be moving down deeper. So I positioned my last take profit to this level down here. It was here, right? This level up, down here, I mean. Let me highlight it for you. As you can see, we also had some bit of a zone which was respected here, a key support that was being respected. So with all this in mind, these were my take profit levels. So I had to wait for price to do its thing and also move according to how I had predicted. Let me get rid of this trend line for you to be able to see what really happened in real market conditions. And as you can see, let's break price. So we had some bit of a drawdown. Price went back to my drawdown and almost hit half of my stop loss, but I was okay with that because I believe that price was showing me more confirmation that it would be going down. So I calmed down and then let price do its thing. And as you can see, price kept on going down and straight to my take profit. This was under news, that's why this was a very rapid trade. As you can see, price hit my first take profit, and I just closed a few of my positions and also took some partial profits from here. After I got some partial profits from this level, which was the 3 to 1 risk reward to risk ratio, and then my last take profit level was this lower. And as you can see, price also kept on going further, as you can see, because the momentum was a little bit faster and more sellers were coming in. But I was okay with my profits because I had been okay with what the market had given me. I was okay with it because like my confirmations and everything had underlined, had went well with the trade. As you can see, this is how you clearly underline or clearly identify trades on gold. So thank you for watching and stay tuned for more videos. As you can see, the power of Fibonacci is almost underrated by many traders, but it should be taken in considerations because the Fibonacci clearly underlines with what should happen in the market, right? If the trade goes beyond this 38.2%, there's a very low probability that your trade is going to play out well. It may be a shift of structure to the upside, or if you're on an upside momentum, it could be a shift of structure to the downside. So be able to know how these Fibonacci levels work, and also, as you know, don't just rush to one strategy that you have seen a YouTuber make. Just be free and feel free to taste it for yourself, for you to have more confirmations for what you have been told. So stay tuned for more videos. Bob Millie signing out. Thank you for watching.